Calvin Waite with Humbl Financial. Thanks for joining us. And we are today going to be, for the sake of the viewers, talking with you about some of what you've been doing, which is really kind of revolutionary in many ways. And I want to go through what you're doing, and in a way that hopefully for those of us who, like myself, are not all that conversant with things like blocks and the newer form of investing in cryptocurrencies, maybe you can walk us through and help us understand. For those who are watching this and are not familiar with Humbl Financial, among other things, is investing what they call ETXs, not ETFs, ETXs. And on their page, their website, you can see there are these different blocks which one can invest in. And, it seems to me, Calvin, as I look at this, that there are a number of these investments that are doing quite well as we go through the returns here. And we see block 5, 978% a year. That's pretty impressive growth. Can you just tell us a little bit as we go along here? What is it that you do for Humbl, and how is it that you do what you do?
Yeah, so I appreciate the chance to talk about all of this. So the ETXs, essentially it's just short for an exchange traded index. And all it is it is an algorithm that I have come up with. And with the help of Humbl as a platform and as a company, I've been able to create a subscription-based, just a way for people to get exposure to these ETXs in a kind of a subscription fashion. So what the idea behind all of this is that crypto is kind of its own. It's kind of its own world. If you try to go from the stock world to the crypto world, you'll notice that there's usually a little bit more of a foundation. You're trusting companies and decisions. And in the crypto world, it's way more Wild West. It's way more emotional. It's very volatile. And so this whole time I've been trying to help people get involved in crypto in a way that they don't just completely wreck themselves. And the emotionality and all of that, it's hard enough in a slower moving asset like a stock. And it's really hard when you really ramp up the intensity and the emotions. And so this entire time I've been trying to figure out a way to package up exposure to crypto in a way that people that aren't super familiar can get involved and then not have to sit and stress about it themselves all the time. So these are essentially you'll subscribe to it and then submit your trade API keys, and then the ETXs will go ahead and rebalance themselves. The trades will happen by themselves, and the investor can just sit back and enjoy the
hopefully the gains, right?
Yes, hopefully the gains.
So there's passive investing in the stock market that people may be familiar with, exchange traded funds, the ETFs, in which you can buy the whole market, the whole S&P or the whole NASDAQ. Is this analogous to that, where only for crypto, to where people can buy your ETXs and have that, we might call it robo investing, where it's once you invest, you don't have to be following it on a regular basis. Is that more or less the gist?
Yeah, that's the basic idea, is that we want to make it so that you don't have to sit and manage a huge basket of assets. So if you go to the stock world and you talk about an ETF, there's usually an algorithm of some kind, and they will back your fund by the underlying assets that are involved in that. Actively managed ETFs are, you'll have someone that's putting things putting assets together and managing that. These ETXs are all automatic. So the logic behind it drives the entire process. So in other words, if you take an example of the block 5 or block 10, we have selected 5 or 10 crypto assets that we feel have a decent future, and then what happens is that the algorithm itself will go out and not only buy these using your own exchange, but they will also actively manage the rebalancing or even the decision making in the case of active funds. So my background, I was I got a master's degree in finance at the University of Utah, and throughout my entire career, I've really been interested in bot trading and algorithmic trading. In fact, that's how I got exposed to crypto in the first place. Somebody introduced me to Bitcoin back in 2012, and the first thing I did was I looked around and I researched and discovered that there were companies that would buy and sell. You could actually buy and sell stock denominated in Bitcoin, and it was essentially these mining farms. But I wasn't so interested in investing in the mining farms as I was looking at the spread between the ask and the bid on these Bitcoin stocks. And so what I did is I created a high frequency trading algorithm that would be on the inside of both of those trades. And that's kind of where I began messing around with crypto in the first place. It wasn't even trading it actively. It was messing around with these other derivatives.
Which is interesting. How did that work out, trying to...
It did really well, actually. It was, I mean, crypto was just brand new. Back in 2012, almost no one had heard of it.
Yeah.
And it was just a handful of really nerdy people that were involved in it. And we definitely just, I kind of dug in and looked for an angle. I'm always interested in different ways of making a profit, and I love the concept of markets where you have a product and you always have a buyer and you always have sellers. You just don't know if you're going to make a profit or not, whether that price will go up or down against you. So I started there, but over the years I got better and better as a trader. But I really increased my skills as an algorithmic trader in the past couple of years. I took some of the strategies that I had developed throughout the decades that I've traded and produced these algorithms that essentially take all the emotionality out of it, allow you to relax, and just, as long as you're patient, you can just kind of sit back and wait for those returns to come to you. And that's kind of the best way to trade, especially when you're new, because the trading world is so wild. It's so emotional. And I think somebody said it best when they said that the markets aren't there to help us all get rich. Markets are there to wreck you and take away all of your money. And so
I hope that's not. I hope that's not the case. Go ahead.
Yeah, exactly. But you have to have a plan. You have to have a strategy. If you go in and you think, I'm just going to throw money at whatever comes along, you can find yourself in a situation, and especially when you let emotions get the better of you. When your asset is going against you, there's a lot of emotion there, and you might get scared out of your position. You might say, you know what, this is too much for me. I'm gonna cut my losses, and usually that's the worst time you could possibly sell.
Right.
And then on the flip side of that, when your asset's going great guns and you're making money like crazy, it's almost impossible to sell. Now, nobody thinks of selling at a time like that, and that's usually when you probably should take some profits.
Should take some off the table. Now, the thing is, in your block trades here, let me bring that back in. We have, here, thematic, we have block government, block platform, global enterprise, and up here, and you mentioned block 5, and as I said, that's incredible. That's 978% for the last year, about 40% for the last 6 months. And we have also, let me bring in, this is again from your page, the block 5, and it shows the breakdown here of the different coins that you have, digital currencies in there. You have Bitcoin and Ethereum and Digibyte, etc. Is this, how do you determine, and we can see some of the percentages there, 35%, presuming that's still the case. How do you determine how you put this together on block 5, and how is block 5 different from some of the other blocks that one might invest in?
Great question. So there are 3 different types of ETXs. One are just the blocks. So this block 5 just represents a selection of 5 coins, 5 digital assets that we that you would be subscribing to gain exposure to. And the percentages are broken down like this. As you can see, Bitcoin makes up the majority, and then Ethereum is a decent amount, and then Cardano, and then a smaller exposure to Tezos and Digibyte. And we selected these coins back when we launched this in beginning of this year, and we had no, we don't have a crystal ball of how well these will perform, but these are some of the stronger, larger cap coins that we felt like, over the long term performed really well. So this almost has less to do with the technology, but more to do with the underlying assets themselves. When the underlying assets increase in value, the entire ETX does better. And most of this follows Bitcoin. Bitcoin is generally the coin that leads out the rest of the market. So when Bitcoin is struggling, almost everything goes down in dollar terms. And then when Bitcoin's doing well in dollar terms, almost everything else benefits from that. So we try to give a better exposure to Bitcoin. So there are 3 different ETXs. Indexes are just a selection of coins, 3, 5, or 10. The thematics are actually a type of a group of coins that would, in sort of the stock world, you'd think of as a sector. So they'd have a similar theme. So if you want to get exposure to a certain type of sector in the crypto world, then this would be the type of product here. We have a lot more we'd like to add. We've been working through a lot of things. In fact, we have some updates that will probably happen within the next 7 days with some improvements and new products that are coming out. And then finally,
how would, I don't know, maybe you can't say as yet, but how would what's going to come out differ from what you have currently?
So there are some things missing. The final one is the active products. Right now, active products are only available on Bittrex, and my developers have been working hard on trying to get them ready to go on Coinbase and Binance. And from the sounds of it, they're within 7 days of being able to launch that. So we're getting very close. And so these are products that don't currently exist, but that we will be able to release very soon. The actives are a little bit more, they're a little more risky.
So first of all, is block 3, 5, and 10, are those passive investments versus the active?
Yes, the indexes and the thematics are all passive. So you get a certain allocation of each of these coins. The nice thing is that we built in this smart rebalancing, and what that is it's when one of these coins randomly takes a trip to the moon or a spike down really hard, it will rebalance and allocate. It'll take profits off of something that spikes up unusually, and it'll reallocate it into a lower performing coin so that everything remains in balance. And the benefit here is that in crypto, a lot of times things can move without a lot of explanation. So you could have a case where just randomly the market decided, hey, we're going up 15 or 30% in a day, and that's not super uncommon. But oftentimes, in the next few days, it'll probably come back down another. It'll either come back to where it was or back 20%. And so what we're doing is we're scraping off those profits at the time that we see those spikes and reallocating it into other coins that
Can you
still
tell
have
us,
yet to have a.
again, not to, sorry, I just said, can you tell us, like, basically in a nutshell, what are the advantages of this sort of investing? And one of the advantages may be, I don't know, are the fees for investing lower? And does Humble require you, if an investor puts money into these blocks, do you require the investor to keep the money in there for a certain amount of time, or can they
Good
put the
question.
money in and out?
Yeah, you can go in and out. You probably won't see a lot of benefit if you're in and out really quickly. These are all longer term strategies. But as far as fees go, the exchange themselves, there's a fee that's a percentage of every purchase, every buy or sell. There's a small percentage that is paid to the exchange as a fee, and that fee doesn't really change. It does go down based on volume, though. So if there's a really active month where we're rebalancing a lot or things are happening, those fees will decrease, and so you can start increasing the benefit of those rebalances for a lower cost. But yeah, generally, from Humble's standpoint, we aren't charging more fee or anything else for anything. It's just a flat monthly subscription cost to use the bot itself.
And again, I mean, some of these returns, and I've talked to some of the people who have invested in them, the returns are all very good. I mean, Block 10 here, which is 451% for the last year. Well, that's phenomenal, but it doesn't compare to Block 5, as I said, which is 978%. And,
Yeah.
you've got Block Platform, 837%. Compared to the stock market, these are unbelievable returns. Are you that good of an
Well,
investor, or does this have to do with the revolutionary method of investing in crypto? And to what extent should we be well, maybe as part of what we should talk about is your thoughts on where are we in this whole crypto world that we are entering? Jamie Dimon, the head of Chase, says, still thinks, I think he said the other day, that Bitcoin's a fraud, and so you
yeah.
have people who are very big in the financial world still very skeptical about this whole trend, and understandably, investors might be as well. Some people are very enthusiastic. Some people think maybe this is the biggest fraud since, I don't know, the tulip market that went on years ago.
Yeah, very. I've heard many people that have concerns about crypto and what is it used for and why has this become such a big thing. Well, my history in the investment world is that the price of an asset, especially when you have a free and open market, the price of an asset really dictates a lot. It pretty much sums up the public opinion of the entire world of people's opinions on future expectations, all known news. Like, it all boils down to that price. The price that something is trading at that exact moment is essentially the world's opinion on that asset and everything that is known. Can there be mispricings? Yes. Can there be information that the general public doesn't quite know yet or something? Yeah. But in general, a price tells a lot. Back in 2012, when I was first introduced to Bitcoin, they said, hey, there's this digital currency called a Bitcoin, and it's trading for $5. And I looked at him and I was like, wait a second. You're telling me that there's a digital currency that's worth more than $1. And in my brain, I was thinking, well, anything digital can be copied and pasted infinitely. So there's no reason. There's something going on here that is different. Like I could already tell that something was weird about Bitcoin because it should never have traded for more than $1 because people should have been able to copy and paste it forever and the price should be zero. And so then I learned that there's only going to be 21 million. Now there's a cap out there. It's also money that's programmable. It's permissionless. So, for example, if I want to go to the grocery store and buy some food, if my card gets declined, I just barely learned very, very astutely that, you know what, I don't own my money. My bank owns my money. And I'm asking them permission to buy groceries every time I swipe my card. If there's a problem, I have to get on the phone and say, please let me use my money. And so there is a market and there is a need out in the world to have money that you have accessible to yourself, that you don't need to ask permission, that you can move and transport, and that's borderless and permissionless. And there's all these things that make up what Bitcoin is useful for. And now the market says, you know what, these units of Bitcoin, all the public information and all the speculators and all of the people that are using it and have an opinion on it, they have all cumulatively decided that Bitcoin is worth $58,000. That's a big number. And that's quite an endorsement on something that is a fraud or is a some kind of a questionable asset.
Let's just try to look under the hood here for a little bit. So a Bitcoin, or a coin, I should say, a digital coin, is a form of currency, just like we have dollars and we have the French franc and we have the Italian lira. So there's different flavors. Just as we go through Europe, there are different currencies, or at least were last time. I don't, maybe it's all the euro now. But there are different currencies around the world. And in the same context, I would say there is like the Bitcoin or Ethereum, and other people keep making new coins. Is one coin better than the other, or are they theoretically all more or less the same concept, that they're created by computer code, as I understand it? And I would also think that, do they all limit the number? You were saying Bitcoin, I think, is 21 million. Don't they all have to limit the amount of coins that would be ultimately created just so they can maintain value and not be devalued through just manufacturing more and more and more?
Very, very good questions. Yeah, there are a lot of coins, and every coin is open source. That's what makes crypto unusual, is that everything's on the table. You can go and read the entire code base for Bitcoin. And there were people at the beginning that said, you know what, I think waiting 10 minutes for a new block to come out onto the blockchain for Bitcoin is too long. So let's drop that by a quarter. And we'll also quadruple the amount of coin supply, because 21 million is too few. And they just invented Litecoin. And then somebody else came up with a new twist on crypto. Somebody else came up with a new technology or a new invention that uses the same general concepts, but uses a blockchain, but it does it in a different way. Ethereum came along because they wanted a chain that ran faster, that they could write, that was essentially modified, or at least used for smart contracts. They wanted it kind of specialized in a certain aspect of blockchain. And so all of these coins can be, you can copy and paste these and create any number of crypto. The question is it comes back to price again. It's what the world believes it's worth. And so the oldest and the rarest, those ones are generally going to do the best. Ones with practical application, like Ethereum, where you have DeFi and all these other applications, NFTs built on the Ethereum blockchain. You have very interesting use cases for these things. And then there are others that try to do the same thing. And if they've got a large marketing budget and a lot of people that are excited about it, then you'll have a lot of followers and a lot of people buying and interested in the coin. But if I just went out tomorrow and just invented a new coin called Calvin coin, I can't generate value for that. I have to somehow convince a group of people that it's worth more than zero, and that's hard to do. And so you need a use case. You need
Well,
an application, or
and how do you use that?
something.
One question I reached out for a couple of people who are investors. One person asked, will Humbl offer crypto wallets? And before you answer yes or no, or you can answer yes or no, but can you also explain to us what is a crypto wallet?
So a crypto wallet is essentially software. It is all that people when they invented Bitcoin, they used a lot of terminology that was sort of similar to the regular financial world, but it's just different. Like they talk about mining Bitcoin, and you think, okay, well, so who's out there in a coal shaft, working on Bitcoin? But it's the concept of, hey, we're slowly generating these things. A wallet is essentially your private keys. Normally, when you download a wallet, in the old days, you were downloading an entire history of the blockchain. And some wallets still do that, where you'd have the entire history of the entire blockchain on your wallet. But what makes a wallet special is that you have private keys, and those private keys are essentially permission to spend your Bitcoin. So people get confused because if I send Bitcoin to someone, the money does not go into their wallet. The money shows up on the blockchain, and it says this person now has X number of Bitcoin, or this person has X number of this coin or that coin. When you're moving coins around, it's just updating the ledger. The Bitcoin blockchain is essentially a giant database. So when people are moving money around, they're essentially just updating the database. Well, the miners won't allow you to update the database unless you have a cryptographic key that proves that you have the rights to the Bitcoin at your address. So when you
So if
when you
I'm
send,
if I'm going to the grocery store, do I have to have a crypto wallet to use my
yes,
coins?
yeah. So you will, in order to send your coins to the grocery store when you buy your groceries, you need to send a cryptographic, essentially a password that comes from your wallet, saying, I have permission to move my money to the grocery store. And all that's done through the technology. You simply scan it and put your thumbprint on it, and
So
you're gone.
if I have if I
Spent.
have let's say I'm using a debit card and I had $10,000 in my bank account, I might use my debit card to pay for $50 worth of groceries. So I'm only using a small portion of the total, right?
Yes.
Do we use the crypto wallet in the same way? So if I have, whether it's the Ethereum or some other Bitcoin that's, I guess, is that sitting in do I have to have a coin sitting in my wallet, number one?
Yes, you would.
Okay, so let's say I
So you'd
have
have
a
to have.
let's say I have a Bitcoin and that's currently worth maybe 55,000. By using my crypto wallet then at the grocery store, can I use just a portion of the value of that Bitcoin to buy the $50 worth of groceries? In that way,
Yeah,
it's similar to using a debit card.
exactly. You don't have to spend all your money at once. Um, it's so, and that's part of the what Humbl is trying to accomplish. Humbl is trying to create an agnostic type of platform app that will allow you to spend your dollars that are in your bank or your crypto that's in your crypto wallet. We're trying to just make it easier so that it looks and feels like a bank account, but you can use any manner of money whatsoever. And so that's kind of the long-term goal, which there's so many like awesome applications for that. Um, just the fact that there's so much red tape and so much difficulty in moving money around. If Humbl can do what we want to do and figure out a way to allow people to tap into the crypto side where there's no permissions and that it's borderless and things like that, all of a sudden third world countries and countries that are oppressed suddenly have access to a global economy, which is totally world changing. And we have to go slowly. And Brian's the first one to tell you that we have to do things, one step at a time and make sure that we don't do anything wrong or anything. But there are a lot of needs out there in the financial world that can be solved through crypto and through some smart people putting existing technologies in a approachable app. So that's sort of what Humbl's goal is.
One of my challenges here is that I could talk to you for about 5 hours, and we're not going to do that. The other thing is I have kind of two different audiences here. One, the people who might just be tuning in and wanting to learn about what is all this digital currency thing. And the other audience, I think, are the people who are Humbl investors and want to maybe know a little bit more about the internal functionality of Humbl, the blocks that we talked about. So let me close out this part, and maybe we could do a quick part two just for the Humbl investors, if I might.
Sure.
But when you were talking about just what you were saying, that the fact is that the digital currency revolution, which is going to be a global revolution, that when we look around the world, those of us in the United States that use debit cards or credit cards don't see the problem associated with transactions because it's pretty easy with us. Some of us still use checks and put it in the mail. But where Humbl's going is that you can, through your phone, we have Apple Pay out there, we have Square, but increasingly people will be doing transactions through their phones in that form of digital transaction. In second world countries and third world countries, the economies of those countries don't grow as rapidly because people are using cash. And you only want to walk around with so much cash in your pocket because you can be held up. And then someone takes your cash. There's no ownership to cash. The digital world, as I understand it, you own that. You have, as you talked about, a key to your wallet. So someone else can't spend your money. Even if they stole your phone, they wouldn't be able to spend the money that you have. So there's a level of protection, number one. And number two, if Jose in Bogota goes out and maybe he lives in a crime area where he doesn't want to walk around with the equivalent of $300 or $400, but he wants to buy a couch, he can go and buy the couch using the digital currencies. So what Humbl's part of, the way I interpret some of this, is it's a revolution, not just to be cool or do something that's kind of new and sexy, but very much a functionality, improvement of the ability to conduct transactional relationships, which is basically all an economy is, whether you're buying gasoline or couches or a home. It's one transaction after another. And one of the things that I found fascinating is that when we look at third world countries, people say that in apparently a number of cases, people who have resided on a farm, let's say, for generations, and it belongs in their family, they have no deed to the property. It's not recorded. So part of this would be that with a crypto ID, you could have your property recorded so that people can't steal it from you. So there's all sorts of things that I think this move towards a digital application does. People, maybe this is a poor example, but if people think back when, like I grew up and we had dial phones and just normal telephones where you're on the wall, you couldn't be sending someone a photograph through your analog phone system. Now we can easily send people photographs through our digital phones. So in that same way, as we change from an analog currency, which is cash, to a digital form of currency, and again, in second and third world countries especially, that it's going to allow those countries' economies to grow with more transactions because we make it easier, and that alone should create greater wealth within those societies. And it's a very powerful thing because it's a very direct way of, if not solving global poverty, at least alleviating some of the level of poverty that has afflicted, whether it's South America or Africa or parts of Asia. Is that a fair assessment or not?
Yeah, yeah, absolutely. There's so many applications because, I mean, even think about it from this standpoint. We're all getting all pontificous here, but imagine that you're trying to run a charity of some kind, right? And you know that people in an area have been devastated by something, and you need to get funds and resources to that area as quickly as possible. Well, there's so much corruption in a period of, especially depending on what area it is in. There are so many people that kind of take those proceeds and hand out a little bit. But in a crypto world, you can have a list of a country's wallet addresses, and you can send money directly to these people without any permission or without any third party or anything else. Imagine how El Salvador, they've got 3 million people that are using this new Chivo wallet, and if you were like, you know what, I'm going to send $1 to every one of these citizens, there's nothing that really stops you from doing that. And you don't have to ask permission or go through a certain channel to do that. It just makes the world so approachable, and it makes the financial world, it just takes down walls and barriers. And I think, for what crypto is and the capabilities that it provides, it has the ability to absolutely change the world already. And what Humbl wants to do is take this ethos, these ideas and this way of trying to benefit the world in some way, and we want to create something that makes it simple for the average person to just make it approachable. And it's interesting because you've all heard Brian talk about these philosophies.
And let me insert, because
philosophy.
Sometimes we presume people know, if they're new to Humbl, and maybe this is the first time they've ever heard of myself. Brian Foote is the CEO and founder of Humbl, which is the company, and Humbl being Humbl. I just wanted to insert. So when Brian, go ahead, pick that up again. What Brian asserts is what?
Yeah. So he's a guy that wants to make the average person be able to benefit from all the technology that crypto offers, plus a myriad of other things that are in the crypto world that most people you just don't really. It's hard for the average person to get involved, and we're just making it approachable. Well, that's my same philosophy when it comes to the trading and the algorithmic trading, is that, a lot of people get involved in crypto and suddenly they're thrust into this world where a market is in front of them all the time. Ask anybody that bought Bitcoin for the first time and ask them if they haven't checked the price in the last 24 hours. It just doesn't exist. And so the problem with that is that you have a lot of very inexperienced traders, and the trading world is difficult. And so what I wanted to do is, okay, I want to figure out a way to make something. I want to take the emotions out of it. I want it to be able to do things. I want it to be smart about when to get in or out or when to rebalance. I want it to be smart and benefit people in a way. But I also want to make it approachable, make it so that the average person can get involved and not be scared out by, the complexities or the technicalities or all the other things that are involved. And we have a little ways to go to make it approachable, but it's I think we've already made a pretty good step forward in making it approachable for the average person.
So, Calvin, I know your time is going to be limited, and we appreciate it. I think we've kind of explained to some extent, hopefully scratched the surface on understanding a complex topic when we talk about digital currencies and all.